Hi. So let me just share my screen again and let's do the second question. I hope you understood the first question. So this is question number 3. So I'll just delete these so that you can do it with me. Delete it from here and from here. I'll leave the format because it will be easier to explain. You can also use the format on your own to solve the question. Okay. So here it's a simple question. It's about marginal and absorption costing. So here what's saying that Posey Manufacturing has the following cost information for 2021. Direct material, direct labor, variable manufacturing overhead, variable sales and administrative overhead, and uh, fixed manufacturing overhead and fixed sales and administrative over cost. During 2021, Posey produced 12,500 units, out of which 11,000 units were sold for 3,000 each. So they're producing something. They're selling it for 3,000 rupees. They produced 12,500 units, but they only sold 11,000 units out of those. These are the direct material cost, direct labor cost, variable manufacturing costs. So these are the variable. So you remember in case of marginal costing, what we do is sales minus variable cost gives you the contribution. Contribution minus your uh, fixed cost will give you the total profit or loss. Correct. Now, what I will do over here is firstly I'll calculate the sales. So sales is 11,000 units for 3,000 each. So here this is a format sales minus variable cost will give you the cost of goods produced. So these will be for the entire 12,500 units, right? Now there's an opening stock. Here in this question, there's no opening stock. If there was opening stock, I would have added that. If there is a closing stock, here there is a closing stock. So it's 12,500 units that I've produced, but 11,000 only was sold. So there's a 1,500 units of closing stock. So this will leave me at 11,000 units sold. For that, I will use the variable cost. Uh, selling variable cost only on those 11,000. This will give me a total variable cost. When I subtract the sales minus the variable cost, it will give me the contribution, and then I'll subtract the fixed cost. So let's get started over here. So what I'll do first is sales. So number of units that were sold was 11,000, right? Per unit sales price was 3,000 each. So this gives me a total of 33 million or 3 lakh 30,000. 3 crore 30,000. 3 crore 30 lakhs. Direct material, again, direct material will be incurred on all the material that was produced. So 12,500 units were produced. So 12,500 were produced at what rate? So here they were produced at the rate of 300. Okay. So this is direct material 300. Direct labor was 200. Variable manufacturing overhead was 100 rupees. These were all incurred on 12,500. Okay. If I do a subtotal over here, it will give me this multiplied by, sorry. Yeah. So 12,500 multiplied by this. I'll do subtotal. So this is the sum of all goods produced. Okay. Yeah. Um, Now what I will do is there's no opening stock. So there is no opening stock and the cost of opening stock is not there. So if there was a cost of opening stock, I would have added that. This would be added back. If there was a closing stock, so here there is a closing stock of 1,500 units. So I'll do a negative figure here so that the calculation directly shows negative. So 1,500 units were not sold. So what I'm doing is basically I've incurred variable cost on 12,500 units. But let me just sum this also up. Okay, so I have incurred cost on 12,500 units, but I have only sold 11,000 units. So 1,500 units are still with me. What is the price of these 1,500 units? It's 600 rupees because that is what I have incurred to produce these units. So I'll take the value of these. So this is this multiplied by this. So this is 900,000. So this is 9 lakh rupees worth of closing stock that is still with me. So this is a cost that I've incurred, but I should not deduct this from the variable cost right now because this is not yet sold. Okay. So this is the cost of goods sold. So this is the cost of goods produced, and this is the cost of goods sold. What I'll do is this plus this. So 6600 is the cost of goods sold. Variable cost, again, variable cost, sales and administrative overhead is only incurred on those goods which are sold. So this is 11,000. Okay. Here is also 11,000. What is this variables SNA? This is 50 rupees. So again, this is this multiplied by 50, right? This is equal to this plus this. Okay. So this is my total variable cost that I've incurred. Now, when you subtract this from the sales, so 33 million minus 7.15 million gives you 25.85 million, which is your contribution. Now, fixed cost, manufacturing fixed cost is 40 lakhs, 40 lakhs, and this is 1250 lakhs, so 12 lakh 50,000. Okay, so total fixed cost is 5250. So you subtract that and you get a fixed net profit of 20,600, 20 million, um, 20.6 million, correct? So this is how you do the marginal costing part. Okay, I'll also show you the differences, where the differences are between the absorption and marginal costing. Now let's come to absorption costing. What absorption costing does differently is, instead of just taking, so in marginal costing we take all the variable costs together and all the fixed costs together. But in case of absorption costing, what we do is we take all the costs that are incurred in one way. So basically, uh, fixed manufacturing overhead is also incurred while manufacturing. So here what happens is your cost of good produced does not include your fixed manufacturing overhead. So here what I'll do is, see, sales is the same, 11,000 per unit. Again, it's 3,000 per unit. So it gives you 33 million. Variable cost is again incurred on 12,500 units, 12,500 units, 12,500 units, and this is fixed manufacturing overhead. So it doesn't really depend on the number of units, but still I will write the number of units to show you why. Okay, so 300, 200, 100. So 300, 200, 100. And this over here is basically 40 lakhs. Right now I can calculate an absorption rate. So this is basically 40 lakhs divided by 12,500, which gives me 320 rupees of fixed manufacturing overhead. I'll just multiply this quickly. This multiplied by 300 and down. Okay, so this is the total cost of goods produced. So I'll calculate this. So here you see the total cost of goods produced will be 11.5 million compared to 7.5 million over here, because the 4 million of fixed I had not taken. However, you can see that the cost per unit goes to 920 instead of 600. Okay, because I am adding 320 rupees per unit of fixed manufacturing overhead. What is my closing stock? Closing stock is this minus, so this is negative, so minus 1500 is my closing stock because I was not able to sell these. Per unit cost, again like before, what I'll do is I'll take this value only, whatever was my cost of goods produced, because these were produced during this time. If it was produced in an earlier period, then the cost of goods produced would be changed to that period. So here is because it's produced this year, this is the 920 was the cost for these. So I'll multiply these again, equal to this multiplied by this. So again, another portion that was here was under or over absorption. So in case, some cases, what happens is, here we had calculated this rate, 320. In some cases, what happens is, it says that the absorption rate for uh, fixed manufacturing overhead is 300 rupees, let's say. In that case, that 20 rupees is the additional absorption or over absorption. If it was 280, it was under absorption. So for that adjustment, you have this over or under absorption, which in this case is not relevant. So we'll just put a 0 and go ahead. Okay, so cost of goods sold is basically again this plus this plus this. So this is the cost of goods sold, 10 lakh 20, 10.12 million. Variable sales and administrative overhead is will be incurred on the 11,000 units, right? This is rupees 50 equal to this multiplied by this. Fixed variable cost is 1250, 1250, 10 is missing. Okay, again we'll take an absorption rate over here on the 11,000 is equal to this divided by this, right? So here you can see it's per unit 114 rupees. Now total cost, if I take equal to this plus this plus this, so total cost is 11 lakh 92,000, and the profit comes to, so here because I'm not deducting variable cost, I'm deducting the entire cost. So the total cost is here 21, the total profit is 21.08 million compared to 20.6 million over here. So you can see that there is a significant difference in the profit. So now where is the difference? The difference will be in the closing stock, value of the closing stock. Even though the units are the same, the value of closing stock here is 9 lakhs. The value of closing stock here is 13.80 lakhs. Why? Because we have taken the absorption rate of fixed manufacturing overhead. So in other questions, they might ask you, explain the differences between these two. So you can see that the direct material over material, direct labor, and variable manufacturing is the same, but fixed manufacturing overhead will be also included in the closing stock. So that is why the valuation of closing stock will be different. The cost of goods produced, the cost per unit of good produced will also be different. It will be 920 over here and 600 over here. Um, the cost of goods sold will be here, it's the same, but what we have done is fixed manufacturing overhead was taken over here, fixed sales and administrative overhead was taken over here, but here we have taken all the fixed costs in one slab. So honestly, this is the two differences that we have, which is why the profit, so this difference in the profit, if you see of so here the difference would be this minus this, so the difference is 480 rupees. If you add this to the, if you add this and the closing stock, you'll see that the difference is 9 lakhs, which is the so the difference between the closing stock in these two cases is the difference in the income. Okay, there's no other change. So I hope you understood this question. Again, I'll just go through it very quickly. In case of marginal costing, what we have to do, sales minus variable cost will give you the contribution, minus fixed cost will give you the net profit. Here sales I've taken over here, I've taken all the variable costs in two brackets. So first bracket is all the variable costs that were incurred on the goods produced, and then the variable cost on the goods sold. Okay, and then I've taken fixed cost in one slab. Here what I've done, in absorption costing, we take the all the costs regarding production and all the costs regarding sales together. So here the fixed manufacturing overhead also been absorbed in the closing stock, whereas uh, and the fixed selling and administrative have also been absorbed in the closing stock of goods sold. So this is the basically the difference. I hope you understood this question. Question number 7 from the midterm is also similar. I will solve that also. So it will help you give more clarity. But I hope you understood this question. You can use this entire table or format for your remedial exam, and you can just delete the values and just use the sheet. Okay. Thank you. And just make sure that you change the formatting a little bit before using it. Okay. Thank you.